Welcome back to the Global Business Report here on Arise News. Let's talk private equity. Nigeria in the past 5 years has attracted more than half of the private equity funding allotted to the West African sub-region. This was disclosed by the African Private Equity and Venture Capital Association, AVCA, in an interview. Now, the question is there potential for further growth, and what sectors on the continent will attract said growth? Still on the matter of funding, startups with a female founder or a founding team made exclusively of women still attract barely any of the funding going to startups in Africa. Female single founders and female-only founding teams have raised less than 1% of the total raised on the continent this year so far, roughly 1/100th of what their male counterparts have raised. Indeed, male single founders and male-only founding teams have raised over 81% of the funding this year so far across the African continent. This according to public deal disclosures. Joining us to discuss both of those stats is Adesuwa Okunbo Rodes, who is the founder and managing partner of a private equity firm, Aruwa Capital Management. You are very welcome. Thanks for joining us.
Thank you so much for having me.
All right. So using that last data point that we're looking at with the male and female founders, for as far as funding is concerned, so why is it so low for female founders?
Yeah, I think in my view, I think it's low for two reasons. The first reason is within the finance industry, within private equity and venture capital, there are systemic issues in relation to unconscious bias. Women that are raising capital are typically deemed more risky than their male counterparts. And actually, research from Harvard Business Review showed that the line of questioning for female entrepreneurs is different to male entrepreneurs. So a female entrepreneur will be described as young and inexperienced. A male entrepreneur would be described as young and promising. London Business School also saw this disparity in line of questioning as well. Male entrepreneurs are typically asked promotion questions, whereas female entrepreneurs are typically asked preventative questions. So a male entrepreneur would be asked, how do you plan to grow your business in the next 5 years? A female entrepreneur, on the other hand, will be asked, tell me how you plan not to lose customers in the next 5 years.
All right.
So that disparity in language, that disparity and that unconscious bias that female entrepreneurs are typically facing when they're in rooms of investors, when they're in rooms with bankers, is what's causing these disparities we're seeing. So that unconscious bias, when I set up Aruwa Capital 2 years ago, the reason I set it up really was because we don't have enough women allocating capital. If we had more women allocating capital, if we had more women in investment decision-making roles, then we wouldn't see these unconscious biases that you're seeing in boardrooms where a woman is in front of 5 men asking for capital.
Gotcha.
We need to have more women in investment decision-making roles. We need to have more women allocating their own funds so that we can see these disparities, fall. And it's actually been proven that when you have more women allocating capital, they're 2 times as more likely to fund a female startup that's run by a female-led startup, and they're 3 times as more likely to fund a startup with a female CEO. So these disparities that we're seeing, and it's ridiculous. Female entrepreneurs this year, this was a record year for VC funding.
Right.
They're raising less than 1%. It's unacceptable in my view.
Gotcha.
But the only way that we can change this is if we have more funds like Aruwa that are investing with a gender lens and are consciously trying to change the narrative for female entrepreneurs.
All right. So as far as improving those numbers that we just put up, that's it. So you have to have more of these funds focused on female founders.
Yes.
Okay, on the diversity front, right, as far as making the business case to invest in women as fund managers, entrepreneurs, consumer stakeholders, where's the upside? Because there's a risk there, right? So where's the upside to that?
It's funny you say that there's a risk.
Am I being like the founders that you just talked about?
You're being like those men.
I'm showing that bias. See, well, there it is.
It's funny you say that there's a risk because I see it as probably the most exciting arbitrage opportunity that we have left in private equity. Because in an industry that is dominated by men allocating capital, as a woman allocating capital, you can invest in their blind spots. We have access to the best female entrepreneurs in our networks as women. We understand the best businesses that are producing solutions to problems that women understand in terms of goods and services for women. So I think there's a tremendous upside just because of the limited competition. You can cherry pick the best female entrepreneurs. You can cherry pick the best businesses that are addressing the untapped $15 trillion female economy. So in terms of the upside, I'll throw some statistics at you now.
Right.
I hope you're ready.
We love statistics on this show. We love it, yes.
I hope you're ready.
Yeah.
Because McKinsey has found that if the gender gap is bridged, so if some of these disparities that we're seeing in the economy are bridged, it can be an additional $28 trillion added to GDP.
Oh, wow.
BCG has also found that for every dollar that's invested in a startup, female founders are returning 2 times as much than male founder teams.
Oh, okay.
McKinsey has also told us that gender diversity on senior executive teams, these companies are 21% more likely to experience above average profitability. IFC has told us that if you have women in investment roles and you have gender diverse senior investment roles, they're likely to return 20% more in return than just male founder teams. So the research is now out there that gender diversity helps to improve profitability, helps to reduce risk. So we really now have to be intentional about how we have gender diversity in our portfolio companies, because that's how you're actually going to enhance return and the profitability of your businesses. And I think the world is now waking up to this, and that's why we're seeing movements like the 2X Challenge that's looking to mobilize $15 trillion to female economic empowerment in developed countries in the next year. So I think it's probably the most exciting arbitrage opportunity for us, because we're able to enhance return for our investors as well as contribute to positive social impact as well.
Great stuff. So I guess that preempts my next question. If one was for PE firms that adopt the philosophy that you're putting forward, measuring the return, is it those metrics? So how are you?
You wouldn't measure the return any differently to any other private equity funds. You know, just because we invest with a gender lens, where we're investing in businesses that are either providing essential goods and services to women, because we see that as an untapped economy, or businesses that are founded by women, led by women, or have gender diverse teams, that should not change our return metric. Just like any other fund, we're looking to exceed 3 times your invested capital. We're looking to generate over 30% IRR. But I think what we're also...
Sorry, for our viewers, IRR is internal rate of return.
Yes, sorry.
Internal rate of return. We got a little technical. Please carry on.
Sorry. Yeah, so those statistics don't change. We're looking to generate return just like anyone else. And I actually think through this strategy, you can actually surpass and exceed those returns because of that arbitrage opportunity I spoke about. But in addition, we're also intentional about measuring the social impact that this strategy has.
Okay.
Because guess what? Women invest in everyone else. So as we invest in women, and these women are empowered, as they become more financially independent, these women are typically reinvesting 90% of their income back into healthcare, education for their children, for their families. Unlike men, where the research shows that they're only investing 30 to 40% of their income into their family. So this multiplier effect, you can see that in local communities, in economies, and countries, as women are empowered, they're pulling other people with them. So we are very intentional about measuring the social impact. Not just the return that we're making for our investors, but what are the jobs that we're creating in our communities? How are women, how are they being promoted within the organization? How are we improving gender diversity on our boards? This is something that we're very, very conscious about measuring as well. But please don't think that this is charity.
Right.
We're making money as well.
You're for profit.
Of course.
Right.
I'm a capitalist and an investment banker at heart.
Right.
We're definitely making money.
Gotcha.
But we're intentional about the social impact as well, and we're very, very intentional about changing the narrative for women. And
so the balancing act can be done.
It's a triple bottom line effect, where you can make money, reduce gender inequality in society, and also have tremendous social impact in the economy as well.
Great stuff. Incredibly optimistic stuff. Backed by numbers.
Yes.
We just had some figures on the screen there. Private equity growth across Africa, 2015 to 2020. What do you make of, Nigeria taking up, the bulk of what came in through West Africa? Can we call this progress for private equity across the continent?
I completely believe so. I think that over the last 5 years, I think we've seen the numbers go to about 250 deals or so happen last year, compared to about just under 190 in 2015, with Nigeria making up the majority of that. And I think that's not surprising. We're the largest population, we're the largest economy. And I think you also saw that some of the sectors that dominated were financials, consumer staples, industrials. So for me, I think there is a lot of progress within private equity. I think that over the last decade, there was obviously people pouring into private equity for the Africa Rising narrative. And I think that now, with what we're seeing with not only private equity, but also VC, we're seeing a lot of foreign investors pouring into Nigeria to tap into that rising middle class, to tap into that rapidly growing and urbanizing population. Because, half of the global growth in the world, in terms of population, is going to come from Africa in the next 30 years. So people are really keying into that. And I think the beauty of the African continent, and Nigeria especially, is valuations are still attractive if you compare it to other developed markets. So the time is now really to start investing in private equity and venture capital.
Is private equity, can you describe it as patient capital, or must you get a return in 5 years or less?
I think it's patient. Obviously most private equity investors are looking to exit within a 4 to 6 year horizon. But in our markets, that is patient capital. Bank funding mostly is, 1 year rolling loans, typically very, very short tenors. You don't see bank funding for more than 3 years if it's not concessionary. So private equity is the most patient form of capital that you can get in our markets. And it's not only just capital as well. Remember that private equity investors are also coming with corporate governance. They're also coming to institutionalize your business. They're also coming to improve your accounting, improve your reporting, institutionalize businesses. So it's patient capital that also comes with a lot of benefits to help to institutionalize these businesses as they grow and scale up as well.
Great stuff. I have to ask you about the pandemic. How I'm assuming you weren't immune from it. Did you?
Yes.
As far as the impact was concerned for the field, it was apparent.
It was definitely apparent. I think you saw numbers kind of come down. There weren't as many deals done last year as they were maybe back 5 years ago.
Yeah.
But I think that a lot of private equity managers were really just optimizing their portfolios. A lot of our companies, their supply chains got hit. So we were really just focused on optimizing our existing portfolios, working hand in hand with our CEOs to see how we can fix that and help with the disruptions. But I think what we've seen this year is a lot of the activity has now come back. And people are very, very optimistic and deploying capital. At Aruwa, we've done 5 deals this year. So even though we didn't do any deals last year, we've been very, very active this year.
Okay, I'm glad you mentioned that. Looking ahead to 2022, since you've seen those numbers, Nigeria is the bulk of where these funds are coming in. It's a pre-election year. I keep asking this to all my guests. What is the strategy for investing in 2022? Are you taking a wait and see approach to see how the political tensions or whatever simmer down, or how they play out? Well, what's the move?
Yeah, I think for us, we're definitely watching. We're very, very keen to see how things play out. But from the get-go, I think when I set up Aruwa, I've always wanted to invest in defensible sectors. So regardless of who is in government, regardless of macroeconomic situation, we're investing in essential goods and services. People are always going to need healthcare. People are always going to need access to payments. People are always going to need power. People are always going to need essential consumer goods. These are the sectors that we focus on. So if it's an election year, if it's not an election year, you need to go to the hospital. You need you need to eat. You need to make your payments. You need power to fund to fuel your fridge. So these are things where we want to invest in defensible sectors that are not cyclical and not depending on the environment. But we're definitely watching because we're watching.
Great stuff. 1 minute to go. I want to ask you, as far as investing in people and that the focus, your philosophy, skills, education, human capital development. What's your read on those metrics?
So for us, we're very, very intentional about those things at Aruwa. And I think I touched on this briefly. We're providing capital to our companies, but we're also playing quite a strategic role in the ecosystem where we want to provide the next generation of well-funded, institutionalized businesses in Nigeria. And to do that, you have to provide more than just capital. You're providing skills, you're providing knowledge transfer, you're thinking about processes, thinking about enhancing your operations as a company. And as we do these things, we're pretty hands-on, we're a local investor, so we can be. As we do these things, we're improving education, we're improving skills, and it's contributing to human capital development as well.
Excellent conversation. Thank you so much, Adesuwa Rodes, head founder of Aruwa Capital. It's appreciate have you coming and talk about private equity.
Thank you so much.